Hello and welcome to Pro Trader Strategies market commentary for Tuesday, September the 29th. And I'm Eric Wilkinson. Yes, you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, and how that all comes in to impact the markets with my market analysis. I'm going to do the same thing for you folks, but I'm going to go a little bit further and talk about option trades that I'm implementing into my portfolios based on those assumptions from the economic and geopolitical environments impacting the markets. All right. So what we're doing here is not just picking option strategies out of the hat. No, I have some guidelines that I've come up with over the 25 years of trading that I'm passing along to you all to implement into your portfolio so that you can narrow down that process of finding the right strategy for any given underlying. All right. So without further ado, let's get on with the economic data across the pond. Really not a whole lot to see across the pond. It's a pretty light week, other than I think every FOMC member is speaking today. No, not quite, but it feels like it. We've got, I'm not going to name them all off, but William Harker, Quarles is speaking twice, Williams is speaking twice. So these guys are getting in some face time today. I don't think that that's really what's overall driving the markets here, and we'll talk about that. It's really Tennessee Titans came out and said that I think there's 4 people on the staff and a couple of players have tested positive or at least have been interacting with those people. So they have shut down the facilities. And now I think that they were playing Minnesota, so they're checking out Minnesota as well. That, I think, is an overarching wet blanket on the markets today, because that is the fear that, hey, you know, we thought that these football players, yeah, they have the social distancing, they've been testing and been very careful, but it's sneaking through into these people as well, and that is going to mean that we can't go to a football stadium probably. It means that is this season going to be cut short? There's a lot of things that are pulling on the markets here today. Here we have crude oil off by about $2, breaking below that Fibonacci, the 50% Fibonacci. Now, I've talked about this time and time again. Is it really going to act as a support and resistance right now? I don't believe so, because it happens to line up with that point of control. It's going to want to, it's the magnet. It's going to be able to toggle back and forth. But having said that, if it looks like there's not going to be a reopening trade, well, that is going to hurt crude oil. Why? Because of manufacturing. It's one of the more of the demand aspect to crude oil, and the gasoline is we wouldn't be traveling so much. All right, so we've got crude oil coming off. It's giving the opportunity for gold to make a move higher by about $16.50. Why? Because it looks like we have a stimulus package that actually started being kind of filtered out into social media and the mainstream media yesterday, that it looks like there is something very close at hand for another round of stimulus. That means weakening dollar. That would create dollar-denominated assets to move higher. Yeah, well, you might be saying, well, hey, crude oil isn't a part of that. Well, yes, it is a part of that. Yes, the weaker dollar will give levity to crude oil, but it's going to be more of an overall demand aspect of that weakening demand and lowering of price for crude oil over that weakening dollar, okay? Whereas gold is very sensitive to that dollar strength or weakness, okay? And so we're seeing that get a bit of a push here. Looks like we're going to go up and test that 1900 handle relatively soon, if not while we're doing this daily market commentary, as we're only about $1.50 away. All right, bonds moving higher as well. Again, right there where they're supposed to be. We're talking about 30-year interest rates being for a mortgage lower than 3%. Another thing to keep in mind is inventory of homes on the market is like less than 3 months, which is the lowest level that we've seen in the history of that data point, which is back to 1984, I believe. So very low inventory of homes. That's causing prices to creep up a little bit, as well as lower interest rates allow that home price to move higher as well. So those are some key levers and pulleys driving this market. One thing I did forget to mention is preliminary wholesale inventories upticked a little bit to 0.5%, expected to be a negative 0.1%. So are we seeing that these manufacturers have built up too much inventory or are not able to move that at this point? All right, that's not what's causing the overall markets to come off. As you can see, the VIX is creeping higher here. The Dow Jones Industrial Average here off 210 points. But again, we've talked about the fact that we have two points of control here in the Dow Jones Industrial Average, and both are, points of interest. But having said that, we have these 2 points of control and a low volume node there. We could easily see us bounce back and forth between these and fill in this little area to create a nice bell curve there. I don't think that we're going to see another massive sell-off, but I do still believe there is some possible pain in our future where we would be testing the 200-day here, simple moving average, in most of these markets, and a settlement below that 200-day would lead one to believe that we're going to be testing some extreme levels like the value area lows and things of that nature. All right, and here we have the NASDAQ. It is doing better than the broader equities markets, but again, still suffering a little bit today as it is off by about 54 points. Not really giving us a whole lot of insight as to a market setup here with the candles higher. This particular candle as of right now is signaling, that's kind of a pause type of candlestick where, tomorrow a confirmation the upside would mean that we are resuming this and creating somewhat of a cup and handle type of setup here, which would resume to the upside there. But the other thing is, some people could say we're kind of building out an inverse head and shoulders where we have a shoulder there, a head here, and create maybe another little shoulder there, which would signal a move to the upside. I don't know if that's what's going to really kind of filter out, but that's something that I was kind of digging into today, that we could have those counterposing head and shoulders that we just talked about as a topping pattern. Well, it can actually act as a bottoming pattern there. Or, some people would say that you're creating the cup and handle where you get the cup and a little bit of a handle here, which would mean we're going to kind of move to the upside. So a couple of chart setups that we're keeping an eye on. We got to wait for those to kind of work themselves out. But again, NASDAQ probably will hold up if this reopen trade doesn't work out. Why? Because if people are sitting at home, then these are the ones that are going to do better in that tech sector, right? E-mini S&P is off by about 21 points on the day. Again, not doing as bad as what we were seeing necessarily over there in the Dow Jones, but worse than the NASDAQ there. And another thing to note here, with this overarching theme, what we're seeing with the Titans and the COVID testing going on, them shutting down their facilities, I'm sure the rest of the broader markets are going to be keeping an eye on that. What is going to be affected by this? Well, the casino stocks, right? We're going to see some of that. Well, let's take a look at the breakdown here. Pretty bearish overall. And just like we talked yesterday, it was a pretty tight day. Overnight inventory pretty flat, but coming into today with that news of the Titans, really, I think, the wet blanket on this overall market. And gold futures, I'm trying to get out of these, or gold ETF, GLD. I'm trying to get out of my puts that I had sold in there. I'd sold the October 166 puts in there, and it's a little bit better than 50% of max profit at this point in time, because I sold those for 79 cents and it's trading right around 27. So with this move today, yesterday it was very close to the 50% of max profit, but I want to keep some of this protection on to protect me on the downside, as I have a lot of long deltas. But this is that trade that I talked about. If we get that sell-off in equities, we're going to probably see that round of stimulus come in, driving gold futures a little bit higher. So yes, I am squeezing this one out just a little bit until I can find something with good strike location to add some hedging aspects to my portfolio there, especially with the way the market's kind of reacting today. I do have a bid in there. Last I checked, it was trading around 28 cents. I'm working a 25 cents or a quarter bid. So hasn't gotten hit. The low I think I saw was 26 cents. And do I want the penny or do I want the trade? You know, we always talk about that. Well, today I want the penny. I'm not going to chase this market. I'm going to allow it to come to me, because if we start seeing more weakness in the equities and more talk about this stimulus throughout the day from the talking heads, then that's going to give this a little bit more room to the upside. So I think the market will come to me on that. So like I said, I'm not chasing that right now. One of the things with this is gold futures, or gold, when gold rallies, has a tendency to see that volatility spike a little bit. So that's kind of offsetting my directional correctness in this trade. Where I'm bullish, I'm getting that bullish move. That is a good thing, obviously, but then I get this little bit of an uptick in the volatility there, and that's kind of offsetting some of that directional move there. But let's talk about the gaming now. So PENN, as you can see here, a big engulfing candle. I am long PENN as a stock. If you guys remember, I got long at around $4.50. I have covered those calls, or covered that long stock with covered calls, and I'm at the 85 strike. But market really hasn't moved anywhere since I put those on, other than kind of a back and forth jostling. So I still have those on. They are starting to work in my favor as this market sells off here a little bit, but still nowhere where I want to cover that trade at this point. You know, I would say it is probably 60% of max profit on those covered calls, but I usually let the covered calls run out a little bit more, and there's only about 17 days left to expiration, so I'm getting that really heavy theta component starting to pick up in there. So I'm going to keep that on. For one, like I said, I would be happy in this type of environment to cover PENN at $85. That would just be a total win in my book. But if I can lower that overall cost basis during the time of holding on this trade to zero, which is quite an easy possibility. Keep in mind, I sold those one for $1.36 in my October 85 calls. Well, I bought it at $4.50. That's where I'm long this overall stock. So lowering that overall cost basis to around $3, I do that a couple more times and I own PENN for free, right? So I'm going to continue to stay mechanical with this type of trade where I own the underlying. I'm doing covered calls, especially in this environment where, you know, we really don't know what's going to happen. It's a great time to be doing covered calls. If they get called away from you, I'm going to start selling some puts and try and buy that stock back at good strike location. So doing all of those things. PENN, we could probably look at Las Vegas Sands. Probably not doing very well today. MGM, we can see, is going to be struggling as well. Very cute, or very textbook topping pattern here, where we got the pop, we got the topping candle, and a confirmation there. That is looking like we are going to be trending down in at least these gaming stocks moving forward. So only thing I really tried to do here today is get out of some of my GLD. I'm not going to try and cover this these 85 calls in PENN today, but I just wanted to talk about that, as the gamers are going to be struggling, because that is part of the reopening trade, right? And there's other stocks that are struggling as well. The tech sector trying to hold on to some of these gains. You know, we're seeing some weakness in like Apple, Google, and things of that nature. But as you know, they say a rising tide lifts all ships. Well, same thing goes as the tide goes out. Some of those are going to struggle because they're getting beached, or I don't know what the good phrase for that is but as the tide goes down, those ships are dropping in altitude as well. All right, so without further ado, please take a moment to check out our disclaimer, as we are an educational company. I'm just trying to teach you guys how to best implement option strategies into your portfolio, and that's about it, other than if you can't take that, take it easy.